So I passed another funded next challenge, and I'm going to teach you the exact strategy that I used to pass this challenge. Well, you might be like, Fast, come on, another trading strategy. The thing is, I have already taught this strategy before on the channel 3 to 4 times, and I'm going to teach this again in this video just to prove that this works, and I've actually passed the challenge again with one of my strategies. The strategies that I have uploaded on YouTube for free. Notice I said free strategies on the channel. So let's go to the trading overview and see what was the win rate. So the win rate was around 70%, and I took around 13 trades, right? And that's how I passed the challenge. And later on in the video, I'm going to show you how I have already secured a withdrawal. I have already secured a payment through this account. So keep watching till the end, and let's move on to the strategy. All right, guys, so here is the strategy. First of all, this is the most important part of the strategy. If you can get this right, you will get the strategy right, all right? So you have to correctly identify the order flow. Are we going up or are we going down? Are we bearish? Are we respecting bearish PD areas or are we respecting bullish PD areas? So in this picture, you can see that we are clearly bearish, right? Now, once you have identified the order flow, all you simply want to do is just mark out every single order block, right? That is there. So let's say that the price is right here at the moment. You want to mark out an order block here. I would mark out an order block here. And then there's going to be an order block here. I would mark it here and here and here. Now, once you have marked out the order blocks, all you want to do is you want to wait for price to come back into your order block. So let's go back. So we have to look at the order flow on the higher time frame, right? So my higher time frame is going to be 4-hour time frame. Now, once you have identified the order flow on the 4-hour time frame, you have to mark out the 4-hour time frame order blocks, okay? Your higher time frame order blocks. Now, what you have to do is wait for price to come back into your 4-hour order block, right? And then you have to drop down to 15 minutes time frame. That is going to be your lower time frame. And all you are doing is waiting for a market structure shift. So price comes into your order block, you look for a 15 minutes market structure shift. And here's the important part. You have to look for a market structure shift during kills and hours. Now, a lot of people say that you only have to look for entries during the kills and hours. But in reality, if you get a market structure shift during kills and hours, which is the London session or the New York session, your win rate will significantly improve, okay? Not slightly. So you take your entry from the order block and you go for 1 to 3 or 1 to 2. Another way that you can look at this, so instead of marking out the order blocks, what you can do is look for liquidity sweeps. So if we are in a bearish order flow, you would be looking for a sweep on the buy side liquidity, right? So in a bearish order flow, we would be looking for a rate on the buy side liquidity. Now, once we have a rate on the buy side liquidity, right? And that rate has to happen after we have created a lower low. So we have a lower low, lower high, lower low. It has to rate a lower high. It cannot be any other liquidity, right? Look at this, lower low, lower high. This is a liquidity level. Lower low, lower high. This is another liquidity level. And then we have a lower low here as well. And right after that, what you would be looking for is a liquidity sweep. Once you have the liquidity sweep, you will be dropping down to the 15 minutes time frame. Once you have the 15 minutes time frame market structure shift after liquidity sweep, you can see we have this higher high, higher low, higher high, a market structure shift, and we take our entry from the order block and pretty much go for 1 to 3 or 1 to 2. Before moving on to the examples, I want to talk about my course plus Discord server. For just $97 one-time payment, you get access to private Discord server where I share my own trades. You get monthly course update with new videos, weekly Q&A and more. And you get awesome community of successful traders. You get SMC basics, right? If you're just starting out with ICT concepts, then you got the basic trading strategies that require no daily bias. Then you got the ICT essentials. You know, all the good stuff like the silver bullet, the auto flow, confirmation entries, and then we got the advanced trading strategies where we teach the daily bias, monthly bias, weekly bias, the market maker models, you know, second distribution models, right? And the silver bullet with bias. Here is some proof of passing the challenge, then some students passing the challenge, and yeah. So let's move on to the examples now. So here is example number 1. You can see we have a clear bearish order flow, right? And right here, we have taken out the buy side liquidity. We took this level out. Now, what we'll be doing is we will be dropping down to 15 minutes time frame. Once we drop down to 15 minutes time frame, you can see we have a market structure shift right here. If I zoom in a bit, and then we have consecutive bullish candles right here. Price comes back into the auto block right here. That is our entry. And we go for 1 to 2 or 1 to 3. Simple as that, guys. Here is another example. Auto flow is clearly bearish. Here is the auto block that I've marked out right here. Price comes back into the auto block. Now, once the price is in your high time frame auto block, you would be dropping down to lower time frame. That is going to be 15 minutes time frame. And as you can see, we have a market structure shift, and then price goes back into the auto block, consecutive bullish candles, and boom, right there. Here is another example. As you can see, we have this auto block in a bullish auto flow. Price taps into the auto flow. Okay, so let's go to the 15 minutes time frame. Price taps into the auto block. We get a market structure shift right here. Remember, we are looking for a body closure. Once we have the body closure, you can see we have consecutive bearish candles. Price taps into the auto block, and we go for 1 to 3 or 1 to 2. Another key thing to note, so when you are on the higher time frame, so the original definition of an auto block is consecutive bearish candles or consecutive bullish candles that take out the liquidity, right? So over here, you can see we have consecutive bearish candles, 1, 2. When you're on the higher time frame, we have to refine the auto block. So instead of using the whole auto block, we would be using the last candle as our auto block, right? Specifically for the 4-hour time frame, okay? But when we are on the 15 minutes time frame, we will use the entire auto block for our entry. So over here, we are going to only use one candle of the entire auto block. If there's only one, well and good. But if there are like a bunch of candles in that auto block, we're going to use the last one in this example. So yeah, that's pretty much it, guys. I really hope you guys enjoyed this video, and go and just test the strategy out, guys. The thing is, every single strategy out there works. It's all about your psychology, guys. Trust me on this. I'll see you guys in the next one. Goodbye. Take care. Mwah.